Hello and welcome. Let's talk about ratio trading and just go over situations which I feel will be realistic and how markets and how you trade it and accumulation modes, distribution modes. We'll assume it's like markets now, everything's down compared to where they should be, not only against the dollar but against Bitcoin. And I'm going to use ABCXYZ as an example. So on this, there's going to be two spreadsheets. One which will give you statistics of the prices and what you're worth, all that stuff. And then one which is where the trades will come in here, which none to start off yet. So in here, this is date, just to use realistic point, just in pretending mode, if you will. Bitcoin price, this is going to be important because, well, how would the markets move in situations? Because I'm going to play it in that these altcoins don't get going until Bitcoin really starts breaking north of 17, 20,000 area. So and it's going to be set up where these things are going to go down. As I mentioned, sometimes you're just going to add more Bitcoin into it. Well, I'll make that situation occur within it. And I got AB's, these are all manual entry points in here. So ABC price XYZ. What that will do is calculate the ratio. That will be automatic. This is automatic stating what the price is. I guess I can put this in currency to make it rateable. Let's do 4 decimal. We'll do 3. Oh, 4 decimals place is good. I got 2 leading zeros. I don't want that. So we got that for dollar price. Now on the bottom here, this is what you would hold. This is automatic. These numbers are going to go up and down. And with the dollar's worth, that is automatic. This is here just to say, if I want to make a trade, let's just say I want to make a trade for 85. It's just going to automatically tell me how many I can get, which is going to come in handy when we do these trades in here. To calculate this is equals 1,000 plus the sum of what would be these numbers in here. So for ABC would be the last one. Same thing here. So you're starting off within, when you start off, what I like to do is put the same amount in each one. So say I was looking to put 400 bucks in each coin. Maybe I'll buy 1,000 of this one and the one that's 23.9 times 2 higher, I'll just buy 23,920. So that's how we start off. So let's just play along this game. Let's just say a few days go by. It's 11/17. Bitcoin has had a little bit of a fall. So have all these other ones. This is 41.85, but this one has fallen a little bit further. We can see in here the ABC is worth more. The ratio going down. So you'd want to sell some of the ABC, and we would own 1,000 of them. So maybe we're like, okay, let's just make a small move. Let's just sell 100. We would get like 2,900 back, 2,906. So let's do that. So you have like minus 100, 2,906, and I just want to use this just for a simulation reference point only. And then the formula that I'm going to have to use for this is equals, I'll take the bigger number. One of them has to be negative. So either negative C2 divided by the B or this one divided by the negative. This is just to get this into a positive number. And I'm going to ensure that this is always 2 decimals. Which it is. I've already done this beforehand. So in setting up, because this is centered and everything. So here we go. So now we can see that the holdings have changed. Now there's 900 here. And there's 28,000. Let's just assume a couple days go by. And this has a nice little breakout fake rally kind of deal. Well, it'll end up being fake. You woke up and it's 196. Lucky you. This is 42.11, we'll say. And Bitcoin is 91.15. So we'll look at this and think, okay, we got a ratio of 21.48. The last one was 29. That's a big differential. Well, why don't we just go ahead and say maybe, let's go ahead and sell like 5,000 of these. That's a big move. Okay, well, 5,000. We could do like 232, we'll say. So we would do 232 minus 5,000, and it doesn't matter, I guess. That's something in the air. I think it was that date. And then the ratio of 21.55, which is close enough to what we got here. And Then we have another situation where let's just assume Bitcoin starts. It's say it's 11:30 now. Week and a half goes by. Bitcoin's at 13,489, and that's brought altcoins down. So this one has went down to 3,015, and this one is a 132. So what would the ratio differential be? Let's even break this down even more. 2412. So the ratio will go up like 21. It's just that's a small move. Let's even assume that this does. Yeah. So now we got to move from 21 to 25. Not the greatest of moves, but a decent move. So you're thinking, okay, maybe I want to sell how much of the ABC 11,000? Maybe like 15, 2,000. You like, oh, I gained like let me just or 150, 200 rather. I gain like 232, so I can easily maybe do something like 175, and I get like 45.15 on it. And there we would have it. We'd have a and let's just assume that the market has one of these nice little moves, like a nice little dead cat bounce rally. But XYZ has a much nicer move. It goes up to 188, and this one goes to 34.75. So the ratio is 18.48. We can see it's like, okay, that looks pretty good for that type of move. So we can make another good trade here. We got 26,000. Maybe look to distribute. Maybe get rid of like 44 of the 4,500 that we got. So I'd be like, okay, 4,400 would get me 238. And I guess that's not centered. So I'm just going to put this into. I thought I did the entire. I did all this in advance. I guess I only did the first 3 rows. Okay, so let's make that go left. And this will go center. All right, so there we have it. And now let's assume, I guess for date it's like whatever. Let's assume it's December 11th, and there is Bitcoin price is 14,800, and a massive decline on this one. Let's just say this was 21.25. This was 106. What would even go 92? So the ratio is 23. It's went from 18. Okay. So now maybe you'd want to get rid of maybe 225, what we got from before, which would get us 51.97. And we had $400 worth of each coin. You notice right now that they're actually worth less. And that's going to be a part of how things work. 12/23, 2 days before Christmas, we'll say. And Bitcoin prices down a bit, but altcoins having a nice little run. Let's just assume what more happened is that ABC just had a nice little rally. We'll say 33,086. This one has went up a little bit, but not much. So the ratio is 26.6. So a little bit of a decent move. You got 1,000 of it. Maybe you shouldn't have sold 225 last time. That was an aggressive sell. But you know what? That's fine. So you say to yourself, I'm going to maybe sell 125. I'll get something back. 33.25. So some more days go by. Maybe it's New Year's Eve now. and Bitcoin price is 14,950. And now another six decline. But this time ABC took a big hit. It goes to 2005. But this one only went to like 92, we'll say. So 2179. You can see, okay, nice little retracement back. But your values is pretty bad. So we're going to do two things here. Let's just assume first you're going to make a ratio trade. Actually, no, I'll do something a little bit. I'll do it a different way, which is buying with Bitcoin, which is an interesting thing. So in here, like, okay, let's get rid of some of the XYZ. Like 10% is 3,000. Let's even go the entire 3325, you'd say. So 3325 would get you 152.5. But then say the next day it just happens again. Bitcoin goes up big, 17,750 on the next day. New Year's Day, we'll say. And this goes down to 1605. And this goes down to, say, 75. So the ratio was 2140, which hasn't changed much. But this is where you say to yourself one day, you know what, I'm just going to buy some more. So let's just assume you bought, well, the ratio is 21.40. So let's just assume you bought, let's say, 300 more of these. I'm just going to put plus 300 on here because I know I would own that. And I'm just for my ownership. Now as we move further, my ratio bets are going to get bigger. So I add 300. So if the ratio is 21.4, I would buy about 64.20. So I'm just going to go plus 64.20. And I would just continue on moving. Let's just say a few days go on. Bitcoin is up to 19,755. Let's just assume that this goes down to 1503, continued further. But XYZ is just accompanying a rally. Maybe it went down to 68 or something beforehand. But now it's at 92. So the ratio is 16.34, which is noticeably lower from the last trade at 21. With all the extra buying and everything, you got 33,000. So, I mean, going out and saying selling like 5,000 of them isn't the worst of tasks. You can definitely do it. So 5,000 for 306. And let's just assume we have some more time. Let's make 115. Bitcoin has a retracement to 17,115. And all the altcoins are going up now, we'll say. And now we'll assume this is the start of a great run. Because as I mentioned, if Bitcoin goes, once it starts playing around this number breaking 20, it wouldn't surprise me if it goes off. Altcoins, that is. So now we have 1,500. Let's just assume that this one has a better move of ABC, 2156. And this one is at 118. So 1827. Let's even do better than that. Let's do 111. And even this will make higher, 2355. So the ratio is 21. It was at 16. Like, oh, this is a great play. I could maybe sell like 280 of these. Maybe you want to do. And you'd get 5940. And I don't remember what the date was. We'll just put like whatever and make the next date 201. So assume February 1st comes in. And Bitcoin goes up to 19,875. And we'll just say this is the start of the crazy time. So everything's been going nicely. This one has a nicer gain. We'll say this goes to 167, 2496. It's I'll even go a little bit better than that, 2696. You can see now you got decent value here with 1,700. Of course, you bought in more. And we can, now, okay, ratio at 16. So it's going lower. So we're going to sell some of that Bitcoin and maybe have the 5940. And let's go ahead. What would say 5250 do? That'd be like three and a quarter. So assume something like that happens. And again, let's just think things get wild. Say it's the next day, and XYZ has just a fantastic move. It goes to 379, better than double. I mean, these days are going to come. But everything on the crypto market is pumping at this day, we'll say. Bitcoin price is 22,000, it's breaking out. This one has a good gain, but nowhere near a double move. We'll say it's 34.25. So now we have your coin's worth decently, but XY, I mean, look at how much this is worth compared to that. A much larger size holding. And you can make an aggressive play, and you would. I think I would make an aggressive play in a spot like this. I got 29,000. I could sell all of them if I really wanted to have some fun. But even still, selling say like maybe 12,000 in here. If you sell 12,000 after a move like this, I get like 1327. So let's just say this is 202, and then let's just assume that same day happens. Hours later, you have this go to 3605, and this retraces down to 305. I mean, it's not just a volatile move. It's stuff like that can happen. You see the ratio is 1182. You're like, man, I could just take a small move here. I gain 1327 of this nice coin. I could just even do like 3 or 400. And if I were to do like say 375, I'd get 4432. So we'll put that in as we move on, and let's assume that the next day during these wild markets, that the price here goes up nicely, say 47.85. And because of the gain, this one even fell a bit more. It's now a 16.28 ratio. Nice little amazing gain. You can make a decent aggressive play. Maybe sell like 5, 6, 700. If we sell like 575, that'd be 93.58 back. And you can see now your value would be about $2,000 each. And I wasn't even looking at that for how much I would sell, which is kind of interesting. But let's assume a few more days go by again, and Bitcoin prices are now, say, really starting to skyrocket. It goes to 27,950, we'll say. And now we'll assume that XYZ is starting to go back up again. This is 57.24, but this is up to 411 now. Nice little move. So the ratio is near 14, and you're like, oh man, I want to do better. So maybe the next day or later that day, this goes to say 439. You see, oh, 13 to 1 ratio. After it was 16, now I'll take that. You say to yourself, that's not too bad. I accumulated 9,000. I probably don't want to sell anywhere near what I got. Maybe like 7,065 or 6750. Well, that'd be 519. So I get a lot of what I sold before, but only selling a good fraction of what I would have had in a spot like that. And we'll say a few days later go by, say 209, and I guess it doesn't matter for the date, I guess. Bitcoin prices 25,000, we'll say, and now we have, how do we want to do this? Let's just do ABC having a phenomenal move. This is just of epic proportions. Say it goes 13,875. And this goes to 611. And now you got this extreme differential in price here. You have a ratio of 22 that was at 13. And now you can be like, oh, I could sell like 6, 7, 800 maybe. Would that be, well, I got good accumulation from before. It's a nice volatile move, and I would get like 18,166. And let's say a few days later go by, 27,952. This has a big decline, say 10,251. This has a smaller decline, 595. 17.2 is the ratio. You're like, yeah, I can sell a portion of it. You're definitely not selling 18,000 probably. You got 42, so maybe you're going to sell about maybe 11,000, 10,000 even, which would be 580. I'm just going to put whatever date in. And then we have, say, some more declines. Say Bitcoin 26,152. This one doesn't decline as much, we'll say 91.75, but this one went through a larger size decline, bringing the ratio up close to 23. So, okay, I could just almost do a flip back kind of deal here. Where I gained 580, I can almost sell like 555 of them and get like 12 triple and 12 triple six. Okay, so that works out pretty good. And even just some statistics you can look at. This is something I like to do just for fun sometimes. Well, not for fun. I do this for actual real. I do it for what you're supposed to in data analysis. I can see that net gain at this point. I've already gained 469 and a half of these through ratio trading of the more expensive coin. Copy and pasting this would also tell me that I'm in a situation where I've also got net gain on this one. I've gained 14,000 in here as well. So I would be doing great shape in the spot here with how these are moving. So let's what did we do? We made the ratio. Yeah. So let's say things go up again. Say it's 311 March now, and Bitcoin prices are now 35,750, and this is where things start to get really haywire. And there'll probably be other little bits of trades in advance too, along the way. I really can't put all. Like, there'd be so many that it could be better than this is another way of putting it. Let's just say this goes up to 15,775, and this only goes up to 511. That would be 30. So you're like, okay, I've already gained 469 of these coins, and I'm just like, I want to have some fun. I want to sell like 620 of them, and just see what would happen. And let's assume it works out for you though. So 620 would get you 19,139. And you can see now that you'd have much higher holding on this side on the XYZ. And then later on, there's the retracement you're looking for happens the next day. You wake up and you're like, so sweet, because let's just assume you got one of those opposite factors where this goes down a little bit, well, 11,296. But this one happens to pump up, and it's not everything going up this day. It's just this one ever day worked out that this was 819. So you have a ratio of 13.79. I mean, this is a spot where you got one of those half off things. You're like, oh my goodness, I could sell all of it. I could do like a half. And you're like, yeah, that's pretty much what I want to do, is close to half. But maybe this is a situation you want to start to profit take. And what we're going to do here is, well, let's just do a normal good trade. Let's to say 20,000 of these things. That's like not even a third, which there's a reason it's not half, but it would be. But I'll get 1450 for 20K. So I'd put that in there. And let's just say it's like whatever date, doesn't matter. And now at this stage, I'm thinking, okay, I want to take some of these coins. Maybe I take 8,000 of them and I sell them on the market for 8,000 times 30 cents. That's a few thousand, like 2,000, 2,500. And I would use that for accumulating Bitcoin. I would use that to try to buy it back cheaper, some of it, and I'd use some of it to buy gold. So, I use some of it to buy gold and silver. Use some of it to buy just regular profit takings, just stuff like that. So what I would do is and here I'm going to go like minus, say I take 10,000, I'm going to go subtract 10K. It's for my spreadsheet purposes, just so I know I got 34,000. That's what I would have. Because I put 10,000, I just sell it on the market. Next day, let's just assume that this has a nice gain, 16,253. This Bitcoin is 41,250 or whatever now. And this has a decline, 744. Ratio is almost 22. So it goes from 13. This is like just amazing times, you're thinking. So do the same thing here, we'd say. Well, I could easily get rid of like 700 on a ratio trade, and I gained 1450. So if I were to do that, say 750, I would get 16387. And again, whatever date, I don't care. And I pretty much do the same thing. Maybe I take like, well, that 300. Maybe I sell 300 that I had from before, even 400. So I'm just going to push minus 400 up here. Because maybe 400 of it I would have just ended up selling at $6. That's like 3 grand I got to manage after that. Again, maybe I sold 3,000 worth. So 1,000 of it I'm going to use to buy back at a cheaper price. Maybe 1,000 of it's going to go into gold and silver, and maybe 1,000 of it is going to go into groceries and maybe your vacation cost, your hotel room, your gas in your car. Maybe you might pay for a portion of the car that you're buying, just stuff like that. Or your taxes, or maybe someone would say, I want to get into crypto, can you sell me some? There's so many different ways in which you can use it on the profit taking measure. Now, if we take this is a sum down to 18, let's just move this now to 21. So in this case, we'd have a gain of 549 there and a gain of 30,000 here, which, when you consider where you started, you would be doing pretty good. Uh, so 550 at 6, 30,000 at 30 cents. It's just part of the game. Now, of course, a lot of this, it can get better than this in two different levels, because there can be 2x, 3x moves that happen. There could be 80, 100x long-term moves that can happen, or better. It can get better than this because there's going to be a lot more trades that can happen, especially when things go wild and markets move up like this. You can notice maybe 2, 3, 4 times in a day you're getting involved, or 9, 10 times in a week, because of how amazing the moves are. When you have coins that move 40% in 40 minutes or 40 seconds, whatever, then you know a lot of the intraday moves can just be awesome. You can flip away. Maybe you hit a sell at some sort of coin that's at 744 Satoshi, going up a lot. And then 2 hours later, it's at 610. You're like, geez, I could almost do a flip back. You do it, works out. Then 4 hours later, it's back over 700. You're like, oh my goodness, I got 2, 3, 4 trades today. And then the numbers can just keep on moving wildly along the way. But I succeeded in showing situations of what I would do when markets going down, how well you would be able to, how you'd have to buy more, and how in selling spots when they go up so much, why you just want to profit take. Now let's just assume whatever happened, you're like, okay, you're going on vacation, and you got everything in freeze mode, nothing's happening for 2 weeks because whatever, and then things just explode wildly. Because I think Bitcoin 65,000 is going to be a big level. So this goes to 65,000. And let's just assume it's the XYZ that really goes crazy. This one ends up going up, say, to 31,750. And having coins go up like 2x, 4x back in 2017, that was like, oh, not bad. And let's just say this goes up to 5,175. You would come in and see you'd have $170,000 worth of one coin. You'd have 29,000 worth of another. You'd have a ratio that was at 614. So in this situation here, you're like, okay, what do we do here? We got 50,000 and I want a profit take. So you know what? You're like, well, 20,000 would probably be a good number. Get back. Um, well, 10,000. If you took 10,000 of this, That would be like 30,000, meaning 10,000. Let's just assume we're going to do that again. 1, 2. Taking 10,000 of it for cash. And at $3 a coin, that's $33,000. So now you do what you do with that. So yeah, I'm going to take maybe 20,000 again. I'm going to take half of what I got. I can see the big ratio is 136 to 30. But I'm going to take 20,000 and buy 32.59. And now you'd have this one worth 97 and 69. And realistically, on a short-term level, like, oh my goodness, what a move. Maybe you get a couple, three trades, small trades along the side, which I don't want to put in for time purposes. But it would be very realistic just to see this now go down to, say, 26,000. This goes to 42,000. And this goes to 2265 with the ratio up to 1148. Decent size move again. You own 4,700. Okay, let's take 1250 of them. I get back 14,350. We'll say. And just make sure. I should just go to like. I don't plan on doing any more, but this is again the sum of everything. And when things get good, this could pretty much always remain positive at the stages because if you get to a stage like this, you would be already at a point where you've profit taked on two different times already in the simulation. You started off with just a few hundreds to start. I think it was like what, $400 to start. Now you're looking at coins worth like 35,000 each, 70,000 total. You would own 35,000, as we can see here, was 23,920, plus an additional $6,000 add-on. So you'd have like this plus your add-on would have been 30,000. You'd have like 5,000 more, minus the profit taking. This side here it says 1,000 plus 300. So obviously they would be doing fine. I mean, you'd have triple up, but what you'd also have happen is, if I have 3, 4 times more coins than normal, that means the amount I trade per time is that much higher. You're basically compounding your gain. They call it compound interest, but interest isn't the right term to use, but compounded math is. Thank you for tuning in. Have yourself a great day. If you have any questions, let me know. But I just want to give a basic idea to, or general to how I end up playing this through because I know the volatility in here. You can see if you got like 70,000 in here, and this is to show what could happen in the future with the major retracements. I would expect Bitcoin to go back to the 20K and pierce below it. So let's just say it went to 18,750. And these things can lose just so bad. I mean, 8,500 we'll say, 750. Now you'd be worth 10 grand. That's just how the game would work. Have yourself a great day. Bye bye. And of course, if you made a few trades back and forth, you might be worth 16 grand and 18 grand. And not only that, but now you're at the stage where those, oh, remember what I sold for profit? I sold that 30,000 worth? Well, 10,000 of it was to buy coins back cheaper. 10,000 of it bought me gold and silver. 10,000 of it bought me groceries and such. So within that 10K to buy back, I'm going to maybe take 2,000 of it now, or 1,500 of it, and buy some coins. And then later on, maybe the prices end up not having some fun later. You can see you're worth like 10,000 here. Maybe there's a rally of 27,500, but the altcoins don't do well. And that stuff like that happens, and you end up buying more because you had Bitcoin that you banked up, or even Tether for that matter, whatever you use in dollar terms, because you sold those prices at magnificently high levels, and we had a plan within the buybacks. I'm going to say, for example, you sold $30,000 worth of coins on the profit taking measure, 10,000 to each thing. So on that, of the 10,000, I'm going to put, say, half of it into Bitcoin and half of it into a dollar form, and I'll use that to buy back amongst those two exchanges. So if it gets really cheap, like it goes down like 60, 70% against either one, I'll just do the buyback. Have yourself a great day. Bye bye.